So this video I want to talk about reversal and continuation pattern, the most key things. All right, so I will start with a reversal pattern. Let's call that reversal pattern. All right, reversal pattern. Okay, so number one, I'll talk about double top. So let's do this. We have double tops. Okay, all right, so double top, I'll first do this. I will do this explanation, guys. So now let's say the market was in a bullish form. The market was giving us higher high, higher low, higher high, higher low, but then the market does this, then does this, comes back. Of course, we're still in our trend line, guys. All right, then the market goes back, then does this. Okay, so the first thing you need to identify is now identify and mark this zone, and that is, now let's call this a neckline. Okay, neckline. So this is a neckline. So this is just an indication that the market wants to reverse to the downside, because generally we were in a bullish market. So how will we approach this? Usually I wait for the market to break out of the neckline, right? Like that. With that, then I do take my sell entry over here, entry zone over here. Then let me tell you something, guys. What should be your target? Use your I needed to go to the trading view, then use a tool, maybe the calculation or the ruler tool, to calculate the distance between the neckline up to this top. All right, so that is where your take profit should be. So let's do this. So probably this is the exact zone, so your take profit should be over here. Okay, I know most of you will be maybe after closing your position, you will see that the market continue going down, probably then asking yourself why you did close your position early. So do not be greedy, just appreciate what the market has given you. Right, then the next one we have this was a double top. Now the reverse one, we have the double bottom. All right, so double bottom, let me do this. Let's just do this double bottom over here, bottom. Okay, so the double bottom is the opposite of this. So let's say the market was moving in a bearish structure, right? So the market was doing this lower low, lower high, lower low, lower high, lower low, but then as usual we have our trend line drawn like that. Okay, so what we need to do is wait for price to do this, give us new lower high, lower low over there, then now come back, do this, then now identify this as the neckline. Okay, so the same way you've done take your entry on the double top is just the same way you'll do take your entry at the double bottom. Right, so you just have to measure the distance between the head and the neckline like that, then that should be the take profit. Okay, easy. So you need to back test this every day. Right, so let's continue. If you do not understand what I'm talking about, you need to rewatch the video again. Okay, so let's proceed. The next one I want to talk about head and shoulder. Another one, key head and shoulder. We have the head and shoulders, guys. These patterns are usually golden, right? You need to understand them before making your decision. Okay, like my policy is, before I take an entry, I have to make sure that at least I've seen one or two reversal patterns. Okay, so let's continue. Head and shoulder. So let's say this, the market was in an upward moving. All right, so giving us higher high, higher low, higher high, higher low, higher high. So what you need to do to see if the market does this, gives us this, okay, higher low, then goes back, of course breaking that, then comes back just like this. Okay, of course, as you can see, we are still in our uptrend. The market does this, retests this, okay, then does this. So now you'll just mark this as our support or our neckline. Okay, so this should be the left shoulder, of course, then this should be the right shoulder, then this is our head. Okay, I hope you guys can see how this is looking like. Okay, so you just have to cut those heads. Right, so all you just have to do as usual is wait for price to break below our neckline. This is the neckline. Let's call that neckline. Okay, wait for the market to break out of this neckline, then now take your sell position sell over here, then where should be the stop loss? Stop loss should be usually above the right shoulder, okay, to be safe. But then what should be your target or profit? Should you target the previous higher low, right? I will need you to take your ruler once again and measure the distance between the head over here up to the neckline, all right? So measure that distance. Then now with the same ruler, let's say this is where the head did end, so this should be your take profit. Easy gang. Right, so let's continue. That was the head and shoulder. Then we have now for the bearish, we have inverse head and shoulder. Inverse head and shoulder. Now that is for a bearish reversal. Okay, let's continue. The market was giving us lower low, lower high, lower low, lower high, lower low, and of course this is our trend line. Then the market does this, okay, then does that, comes back, then does this. Okay, remember we're still in our trend line, right? Then now identify this as the neckline. You have to do that. So we have the left shoulder over here, the right shoulder, then this is the head, okay, then this is the neckline. Once again. My drawing crazy. This is the neckline. Okay, so that done. So as usual, just wait for a bullish candlestick this time to break, then take your buy position over here. Then what? Guess what? You have to measure the distance from the head until the neckline. Measure that distance. Then now do this. Maybe this is where the head distance ended. So this should be your take profit. Crazy and easy, right? So let's continue. That was head and shoulders. All right. So guys, these patterns are usually being formed. They have to be formed either in the actually any time frame. Usually have those patterns, right? Then we have rising wedge. Of course, we have a rising wedge. Let's do this. So the rising wedge is also let's say the market was in a bullish form. The market was giving us higher low. Let me just do this. The market is giving us higher high, higher low, higher low, right? Now let's say that this is our resistance. Let's call this our resistance. Okay, like I usually say, guys, you have to understand how the market is approaching a support or a resistance. Guys, I'm repeating, understand how the market is approaching a resistance or a support. With that, guys, you will know at least what the market will be trying to do, or let me say you'll know the general direction that the market will be trying to continue towards to. All right, so we want to see how the market is going to react to this our resistance. Okay, so now the market continues doing that, then you see the market doing this. Okay, and then it does this. Now the market does this. Let me just draw using a different color. The market does this. Okay, that's what's up. Easy, right? So anytime you see that the market has approached our resistance with this type of pattern, okay, anticipate a reversal. So that is when you wait for the market to break out. I usually say that the market has to break out from the immediate previous higher low this time. So now when the market does that, you might consider taking your sell position over here, then target probably this zone over here. Maybe your stop loss should be this, or rather over here. Easy, okay, that's easy. Then we have the inverse of that rising wedge. So now this one is called a falling wedge. Okay, let's do this. The market is in a downtrend, of course. The market is giving us lower low over here, lower high, lower low, lower high, lower low. So let's say that we have our support zone over there. Okay, the market continuing like that. Let me just draw once again. That's crazy. That's crazy. So the market does lower low, lower high, lower low, lower high, lower low. But then when the market reaches our support, when it's approaching our support, the market does this. Okay, so over here, this is what I'm talking about. You see that the market's giving us such kind of structures. Okay, just like that. Okay, now when you see such pattern, just understand that the market is about to reverse to the upside. That is when you have to wait for the market to break out of this immediate high, then target all the way up. Probably you might target that, or maybe if you are a swing trader, you might continue riding this wave as it continue breaking structure just like that, maybe up to this zone. Easy. All right. So that was called a falling wedge. Okay, so now let's talk about those are reversal patterns. So now I want to talk about continuation patterns. Continuation patterns. Continuation patterns. Okay, so for the continuation pattern, I want to start with falling wedge. Right. Falling wedge, sometimes maybe I usually call it a flag, right? So let's just do this. The market was in an let's write that falling wedge, right? Yeah, falling wedge. Yeah. Okay, so let's say the market was in an uptrend, giving a high, low, high. I usually call this a flag because sometimes it does look like a flag. Then you see the market does this. Okay, let's do this. Sorry. All right, the market does this, gives us, let me make it more clear. The market does this, then you see this happening. All right, then over here we have our resistance line over here. Okay, so this is just a continuation. All right, so all you just have to do is wait for the market to break out of that resistance. Guys, how easy is that? All right, so make your entry zone over here. That should be your entry, then maybe stop loss over here, or rather you can make your stop loss below that, then continue riding the wave. That's easy. So that was a falling wedge. All right, so now we want to talk about the opposite. We have a rising wedge. The opposite of a falling wedge. So just a rising wedge is just a continuation pattern of the bearish market movement. All right, like the falling wedge was just a continuation pattern of the bullish movement. So this is just the opposite, right? So this is what I'm talking about. The market was in a downtrend, of course. Lower low, lower high, lower low, lower high, lower low. Then when the market was moving in back to give us lower, just did this. Of course, then you just have to identify like this. Boom, wait for a break of structure over here or change of character. Bearish candlestick, take your entries over here. This should be a take profit, stop loss. Easy. All right, that was the rising wedge. Okay, so let's continue. Guys, I hope you guys are understanding what I'm talking about, right? So if you don't understand these things, you just have to rewatch the video, rewind the video, and probably you'll get what I'm talking about. So we're still continuing with our continuation pattern. So the next one should be let me see. Let's talk about the bullish rectangle, right? The bullish rectangle. We have that. Okay, so the bullish rectangle is just another continuation of the bullish trend. All right, so this is what I'm talking about. The market was in an uptrend, high, low, high, low, high. Then now, instead the market going up, it does this, it start consolidating. Crazy. Let me just do this. The market now start doing this. Okay, just mark that, identify that. So the market continues moving sideways. Okay, so all you just have to do is wait for the market to break out of this. rectangle zone over here, then now take your buy entry, stop loss now for this continuation to the upper side. Easy. That is called a bullish rectangle. Then now we also have a bearish rectangle. This was a bullish, so we have the opposite should be bearish rectangle. Bearish. Okay, the market was giving us lower low and lower high, lower low, lower high, lower low, lower high, lower low, lower high. Then the market does this. All you just have to do is wait for the market to break out of this with a bearish candlestick at the 1 hour, guys. Then take your sell position over here, hold. This should be your stop loss. Easy. Guys, all right, the moment you master this pattern, guys, I believe trading will be simplified. Everything will be simplified, guys. I believe everything will be simplified. So the next one, we should talk about bullish pennants, right? This is what I'm talking about. We're still under continuation. So we have a bullish pennant, right? So this continuation is just also to the upper side, right? The market was giving us as usual high, low, high, low, high. But then when the market approaches our resistance, rather, let's see the market continue doing this and then does this. So you see that the market continue doing this. Okay, so all you just have to do is wait for the market to break. Boom, take your buy, then stop loss. This is a bullish pennant, right? The other one should be bearish now. Bearish pennant. Okay, so this bearish should be the opposite of bullish pennant, right? So let me do this. The market is giving us of course lower low, lower high, lower low, lower high, lower low, but then the market decides to do this. Okay, or should I? Yeah. Then continue. So now I'll just have to wait for that breakout. Easy. Okay, that means your entry should be over here, then stop loss should be there, then continue riding the wave to whichever place you want. Okay, so we still have others like symmetrical triangles, usual, guys. You know, we have crazy, yeah, should be that though, something like this. The market does that. So the symmetrical triangle, just have to wait for breakout, whichever. It might break to the upper side or to the downside, right? That's what's up, guys. So, and then I have also another one over here about I forgot about the contraction and the expansion, all right? Because I've been trading those ones quite a lot. Those are also my signals for reversal. Okay, contraction and expansion. Okay, so I'll explain this. Okay, so first let's say that let's talk about contraction channel. Contraction channel. Okay, so now let's say that we have our support over there. Okay, so the market does this. Let me do this. The market does this, then does that. Okay, so this is what I mean. The market was doing this, but continues going down a certain zone. So all you just have to wait is for the market to break out of this structure. That means we are almost, or we are about to go back, right? So you need to take your buy position right here, stop loss, then ride the wave, right? Then we have expansion. Okay, for the expansion, let me do this. The market does this. Now it's the opposite of this, right? The market does this. Okay, so the market continues moving like this, expanding, just expanding. Okay, so with this you just have to wait and see what the market will do, whether it will break to the downside or it will continue to break to the upside. All right, I like using contraction probably, but I don't trade the expanding channel. I like trading the contraction channel because it usually gives me more confluence for an up for the trend reversal, right? So that was for the upper side. So sometimes we might be having this, let's call this our resistance over here, still talking about contraction, right? Then now you see that the market did this. Let me say, right, okay, the market approached our resistance in a contraction form. So we'll just have to wait for the market to break. Okay, take your sell over here. Of course, you might make your stop loss over here. Then now, all right, easy. Okay, so I'll just give them, or rather, I'll just draw them all together. The contraction. Okay, so for the bearish, or for the bearish reversal, this is what I'm talking about. This should be our support zone. Let's say this is our support zone, but then you see that the market is approaching our zone in this kind of nature. Okay, so this is it. So you just have to wait for price to break out of that joint. But of course, you have to make sure that that price has given us a double bottom over here, or an inverse head and shoulder for another confluence to go to the upside, guys. You need to be keen, right? Then take your buy, then target all the way up. All right, stop loss over here. Now this is bearish reversal or bullish reversal, right? Should call it bullish reversal. Contraction. Okay, here we are. Okay, so now we have bullish, then we should look for a bearish reversal. So okay, so we have that the market should look, is this a bullish or a bearish, guys? Bearish reversal, bullish reversal. So this should be a bearish, right? I believe so. This should be a bearish. Correct me if I'm wrong. Okay, then now let's look for a bullish. So we have our resistance drawn over there. Then we see how the market is approaching our resistance, just like that. So over here we need market. Maybe the market did this. Then now wait for a break. Of course, the market has to give us a double top or maybe a head and shoulder, probably like that. Then now take your sell over here. Stop loss. Okay, target, that's what's up. So this should be, I believe, bullish reversal. Yeah, bullish, because we are from the bullish going back to the bearish. Okay, so these are the best patterns that I do prefer. But then, like I said before, these patterns, when I do take them, I have to I have to combine them with maybe an inverse or head and shoulder or double top or double bottom, right, before taking my position, right? So I believe, guys, that's what's up, and I hope you learned something. So adios, amigos.